So why PM Capital? We're a mature Australian boutique with a pedigree in global investing. We're actually 100% owned by staff, and we are the largest investors in our funds. As a result, we're very much aligned with our underlying client. If you look at the investment process, it's very much a bottom-up process. It's all about identifying both risk and reward. And basically, we're looking for severe cyclical events that the markets start to price as being permanent in nature, when in reality they're transitory, and that's what provides us with the opportunity to deploy long-term capital. The best way to think of us is that we're old-fashioned stock pickers. As a result, we are very much contrarians. We avoid the popular stocks. We don't like following the herd. We're more likely to purchase stocks when they're out of favour. And as a result, our portfolios differ markedly from the standard institutional fund, which is very much quasi-index. All our stocks are based on the merits, the risk, the reward of the individual stock, and not some benchmark composition. We like to call ourselves benchmark atheists. In terms of the philosophy and process, I think it's really important to understand that it's basically the same philosophy, same process, 25 plus years. What we do and the reason we do it will never change. The best way to preserve and enhance your wealth over the long term is simply to buy a good business at a good price. It's very much about understanding how the business works, understanding how management thinks about their business, and understanding the aspects of a business that will determine true intrinsic value. The reason I say intrinsic value, or what a businessman would ultimately pay for a business, is that if the market deviates from that valuation for too long, someone eventually will arbitrage it, and it's that arbitrage that we're actually trying to take advantage of. Some of the key principles of the philosophy is that you can only value what you understand. It might sound an obvious statement, but I think you'd be surprised how many fund managers / investors focus more on the macro events that will impact a company, as opposed to really focusing in on the unique characteristics of a business that will determine long-term valuation. Obviously, avoid popular stocks. Value is seldom found in popular stocks. We like to say, do not follow the Noah's Ark approach to investing. That is, buy two of everything and end up with a zoo, not a portfolio. In other words, we're more likely to have very focused portfolios. We want to make sure that we understand what we own, why we own it, and then back ourselves by deploying long-term capital.